In 2026, AI capital spending runs to hundreds of billions of dollars a year. The 10 largest stocks are around 40% of the S&P 500. And the phrase "this time is different" is everywhere. The last time that phrase dominated a technology market, 1999. This is that archive. This is an archive of the 1995 to 2002 dotcom cycle. Documented market data only, not a forecast, not investment advice. Chapter 1. The setup, 1995 to 1999. The technology was real. Netscape's August 1995 IPO doubled on day one and announced the commercial internet. Adoption curves were genuine and steep, users, traffic, and revenue all growing. In 1998, the LTCM collapse pushed the Federal Reserve to cut rates 3 times. Liquidity met narrative. In 1999 alone, the Nasdaq rose 86%. 86%. One index. 1 year. Chapter 2. The new economy. By late 1999, the prevailing argument was that profits no longer mattered. Eyeballs and growth did. The Nasdaq's price-to-earnings ratio passed 100. Companies that added .com to their name re-rated overnight. Pets.com became the era's shorthand. Public in February 2000, liquidated by November 2000. 9 months from IPO to shutdown. Chapter 3, March 10, 2000. The Nasdaq peaked at 5,048 on March 10th. There was no single trigger. Barron's published a cash burn audit of internet companies the following week. The Microsoft antitrust ruling landed in April. The funding window closed. No event caused the top. The marginal buyer was exhausted. New issuance had flooded the market and insider lockups were expiring. The supply of shares finally exceeded the supply of belief. Chapter 4. The decline. From peak to trough, the Nasdaq fell 78%, bottoming at 1,114 in October 2002. Cisco fell 86%. Intel fell 82%. Amazon fell 94%. These were the strongest companies of the era, not the failures. Approximately $5 trillion of market value was erased between 2000 and 2002. Chapter 5. The survivors. Amazon fell 94% and then became one of the largest companies on Earth. Internet adoption never paused through the crash. The fiber overbuild of the bubble years powered the following decade of growth. That is the distinction the record documents. The technology succeeded. The prices did not. Anyone who bought the index at the March 2000 peak waited 15 years to break even. The Nasdaq did not regain 5,048 until March 2015. 15 years. Chapter 6. The pattern, the documented sequence. A real technology arrives. A narrative detaches prices from cash flow. Concentration and new issuance peak together. Prices reprice violently, while the technology itself keeps growing. This archive does not predict whether the current AI cycle follows the same path. It documents what happened the last time everyone agreed it was different. The archive stays open. This is what the historical record shows.